Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far, 9 problems I have completed on accounting standards. The last video, 9th problem I have done on AS3, that is cash flow statement. So a specific accounting standard is given AS3 for how to make the cash flow statement, one of the financial statement. So cash flow statement is a statement which shows what are the inflows and what are the outflows of cash during a period of time. So AS3 requires that cash flows should be separated. That means where the business has to show what are the cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. So cash flow means inflow as well as outflow. So this statement is very important for planning, for cash planning, cash management. So in this problem, I am going to explain one problem, that is problem number 10. Problem number 10 on cash flow statement. So before starting the problem, I expect my viewers to have a printout of the problem, which I have given in the link under my description. Always keep it ready. Take the screenshot of the solution of 10th problem, then I'll explain all the points in detail. Now, see the 10th one. Balance sheet of Raman Limited is given below. Liability side 31st March 2008 and 31st March 2009. So last year is 2008 and current year is 2009. Share capital 500, no change. No issue of shares, no redemption of shares. So there is no cash flow from shares. Then 9% debentures. Debentures are last year 200, current year 160. Actually rupees in thousands. On the top it is given rupees 3 zeros. That means 3 zeros are omitted. So if we include 3 zeros, it will be 2 lakh. 200 is given. To 200 add 3 zeros, you will get 2 lakh. So beginning of the year, last year it was 2 lakh, current year it is 1,60,000. That means current year debentures are redeemed because it has decreased. From 2 lakh, it has become 1,60,000. That means 40,000 rupees debentures are redeemed during the year. So redemption means cash outflow. When the company redeems the debenture, there is a cash outflow. Then sundry creditor is a current liability. Profit and loss account. The profit and loss account last year 40,000, current year 54,000. So there is increase in profit and loss account. Then depreciation fund 88. Contingency reserve 1,40,000, 1,10,000. Outstanding expenses 30,000, 48,000. These are the liability side. Now asset side, land and building 300, no change. There is neither purchase nor sale of land and building. Remains same. Ignore. No cash flow. Then machinery 1,64,000 last year and current year it has become 1,80,000. So there is increase in machinery. So machinery will increase on account of purchases. So there are some purchase of machinery. Stock in trade is a current asset. Then debtor, current asset. Cash and bank balance. This is cash and cash equivalent. Current investment. This is also a current asset. Then prepaid expenses. That is also a current asset. So how many current assets are there? One, stock in trade, sundry debtor, then cash and bank balance, and prepaid expenses. Current investment. Current investment is also one of the current asset. Now, the following information is furnished. One old machinery which has original cost of 30,000 was sold for 10,000. So during the year, one machinery was sold. The original cost of the machine was 30,000 and it is sold for rupees 10,000. The accumulated depreciation in respect of the said machinery amounts to 16,000. So 16,000 is the accumulated depreciation on that machine which was sold. One new machinery was acquired for 46,000. New machinery purchased. 9% debentures were redeemed at a discount of 4% of their face value. 9% debentures were redeemed. Already liability side you can see last year debenture 2 lakh, current year 1,60,000. So 40,000 rupees debentures are redeemed, but redemption was made at 4% discount. The company has not paid 40,000. 40,000 into 4%, 1,600. The company has deducted 1,600. So 40,000 minus 1,600. That will be paid to the debenture holders. Then dividend at 12% was declared and paid in cash. Dividend means equity dividend. Here share capital was 5 lakh, 500,000. So 5 lakh rupees is the share capital on which 12% was dividend. So 12% of 5 lakh, it comes to 60,000. 60,000 rupees dividend paid. Always keep a notebook, pen, pencil, calculator along with you when you watch the video. Whenever I explain about the important point, immediately note it down. Otherwise, you will forget it. Then income tax liability of 30,000 paid was debited to contingency reserve. During the year, income tax was paid. And that income tax paid was debited to contingency reserve. That's why contingency reserve has decreased. Last year 1,40,000, current year 1,10,000. From 1,40,000 to 1,10,000. So 30,000 contingency reserve has decreased. Why it is decreased? Because income tax was paid and charged to contingency reserve. That's it. You are required to prepare cash flow statement in accordance with the accounting standard 3. So according to AS3, we have to prepare the cash flow statement. So see here. This is the cash flow statement of Raman Limited for the year ended 31st March 2009. Draw 2 columns at the extreme right hand side. 3 activities are there: operating activity, investing activity and financing activity. So first of all, we'll start with cash flow from operating activity. So we will begin with net profit or profit and loss account. The profit and loss account last year was 40,000, current year is 54,000. So there is increase in profit and loss account. So here net profit before tax. Current year 54,000, last year 40,000. So how much P&L account have increased? 14,000. That is the net profit earned during the year. To this we have to add non-cash, non-operating items. The items may be income items or expenses items. Non-cash and non-operating. These are the items we have to adjust to net profit, right? Now how to make this one? First one, depreciation. The most common non-cash expense is depreciation. But depreciation is not given in the problem. We have to find out. And one machine was sold. So we have to make 2 accounts. Which 2 accounts we have to make? One account is machinery account and the other account is depreciation fund account. Machinery account is given in the problem. Last year 164, current year 180. 1,64,000 is the opening cash balance, opening machinery account balance. This is the opening. And end of the year, it is given 1,80,000. It is given 1,80,000. So this 1,80,000 is the closing. So opening machinery 1,64,000, closing machinery 1,80,000. Similarly, what is the opening depreciation fund liability side? You see, opening depreciation fund 80,000 and closing depreciation fund 88,000. Now opening should be taken on the credit side. The credit side by balance brought down 80,000. This is the opening. And closing is 88,000. So debit side to balance carried down 88,000. This is the closing. The opening and closing balance of machinery account and opening and closing balance of depreciation fund we have taken, right? Now see the adjustment. One old machinery which has original cost of 30,000 was sold for 10,000. Remember, whenever a machine or asset is sold, 3 entries will be passed. The first entry will be the depreciation on that machine which was sold. The depreciation on that machine which was sold. It is given the accumulated depreciation in respect of said machinery amount to 16,000. 16,000 is the accumulated depreciation on that machine which was sold. The entry will be depreciation fund account debtor to machinery account. So depreciation fund account debit side to machinery account 16,000 and machinery account credited by depreciation fund 16,000. This is the first entry on sale of machine. The second entry is sale proceed. The sale proceed is bank account debtor to machinery account. Again I repeat, bank account debtor to machinery account. So machinery account is created by bank. Sale. So how much it was sold? 10,000. We have taken 10,000. And it is given one new machinery was acquired for 46,000. So entry will be machinery account debtor to bank. New machine was purchased. Machine is coming in. So machinery account debtor to bank. So debit side to bank purchase of machine. This purchase of machine is 46,000. That's all. We have entered all the items which are given in the problem. Now we will find out the balancing figure. Debit side 164 plus 46. You will get 2,10,000. 2,10,000. From 2,10,000, subtract minus 16,000, minus 10,000, minus 1,80,000. So difference balancing figure you are getting 4,000. That is the loss on sale. If credit side is less, there is a loss. If debit side is less, there is a profit. So one machine was sold and the loss incurred on that machine sold is 4,000. By profit and loss account, loss on sale, balancing figure 4,000. This is not given in the problem. By preparing this account, we come to know there is a loss on sale of machine of 4,000. Right? And in depreciation fund account, take the balancing figure. So debit side and credit side. 80,000 is the opening balance and 88,000 is the closing balance. This is the closing balance. Now take the total on debit side. 16,000 plus 88,000. 1,04,000 is the total of debit side. From 1,04,000 minus 80,000, you will get 24,000 balancing figure. This is the depreciation provided during the year. This is the depreciation provided during the year. It is not given in the problem. By preparing this account, we come to know there is a depreciation. This is the depreciation for the year. So by making these two accounts, what we have calculated, by making machinery account, we come to know there is a loss on sale of machine 4,000. By preparing depreciation fund account, we come to know depreciation provided during the year 24,000. Now, here non-cash, non-operating items. First one, depreciation. How we got? Here we got 24,000. Take it. That's all. Second one, interest on debentures. Actually, debentures 9% is the rate of debentures. So 9% of 1,60,000, because 40,000 debentures are redeemed. During the year, 40,000 debentures are redeemed. So only 1,60,000 and the rate of interest is 9%. So here, interest on debentures 9% of 1,60,000, 14,400. It is paid in cash. But you will get in mind, you will get a doubt that why we are taking this interest on debenture? Because it is non-operating. It is non-operating. It is financial charges. The financial charges will be added back. Again, this interest on debentures should be taken under financing activities. Under financing activities, we have to show separately interest on debentures. Right? Now, next one is loss on sale of machine. We got loss on sale of machine 4,000 by preparing machinery account. So this 4,000 we have taken. Now dividend paid. Last adjustment it is given during the year 12%. Dividend at 12% was declared and paid. So 12% of share capital. The share capital is given 5 lakh. So 12% of 5 lakh comes to 60,000. So dividend paid 60,000. It's a non-operating item. That's why we have to add up. Dividend paid 60,000. Now if you take the total 14,000 plus 24,000 plus 14,400 plus 4,000 plus 60,000, 1,16,400. From this we deduct one item, that is profit on redemption of debentures. Debentures are redeemed by 40,000. 9% debentures last year 2 lakh, current year 1,60,000. So 40,000 debentures are redeemed. But at the time of redemption, discount was charged. 9% debentures were redeemed at a discount of 4% of their face value. So 40,000 into 4% here. I will write down here 40,000 into 4%. You will get 1,600. That is a non-cash item because it is only adjustment entry. Redemption of debentures at a discount is a non-cash item. So here 1,600. So deduct 1,600, you will get 1,14,800. From this 1,14,800, deduct the income tax paid. Last item is given 30,000 income tax was paid. So I am taking 30,000. See here, this income tax paid is cash outflow. So we are deducting minus, right? And this one also minus. So minus bracket denotes minus. So 30,000 deduct 84,800. This 84,800 is the operating profit before working capital changes. So according to AS3, working capital adjustment should be made in operating activities. In operating activities. Now how to adjust working capital? Working capital consists of current assets and current liabilities. So current assets or current liabilities, these items will be taken as working capital. So changes here. Operating profit before working capital changes 84,800 I have brought down here. Now, current liabilities. Current liabilities, sundry creditors. So before adjusting the working capital, remember the rule. Increase in current liability and decrease in current asset should be added. Remember this point, write it down. Increase in current liability, decrease in current asset should be added. Opposite of this will be deducted. If you remember one rule, automatically the other rule is opposite. This is adding, so opposite of this will be deducting. So increase in current liability. Now see carefully liability side. Sundry creditors. Sundry creditors last year 230, current year 216. 2,30,000 last year, current year 2,16,000. There's a decrease in current liability. So here increase in current liability is added. So decrease in current liability will be deducted. So here less. Deduct means less. Decrease in sundry creditors 14,000. So 230 minus 215. 230 minus 215 is 14,000. So this 14,000 minus less. That's why I am putting in bracket. Bracket denotes subtraction. Minus, right? Next, after this creditors, profit and loss account, depreciation fund, contingency reserve, outstanding expenses. The outstanding expense is also one of the current liability. So last year 30,000, current year 48,000. There is increase in outstanding expenses. So increase in current liability. It should be added. So add items. Increase in outstanding expenses. How much? Deduct outstanding 48 minus 30. 48 minus 30 is 18,000. So 18,000 I have added. 18,008. Next one is come to asset side. Asset side, it is land and building, machinery, stock in trade. Stock in trade last year 2 lakh, current year 2,28,000. There is increase in stock. So decrease in current asset should be added. So increase in current asset should be deducted. So here increase in stock should be deducted. Increase in stock in trade 28,000. ये भी deduct करना है, bracket, right? Next, after stock in trade, sundry debtors. Sundry debtors last year 170, current year 162. So decrease in current asset added. So decrease in sundry debtors. Here decrease in sundry debtors 8,000 added. Then cash and bank balance. This cash and bank balance is cash and cash equivalent. That we have to take it lastly, not now. Last item will be cash and cash equivalent, and that is cash and bank balance. So time being, leave it. Then current investment, that is also a current asset. So current investment are 260 to 190. Decrease in current investment, that should be added. So here decrease in current investment added 72,000. Last one, prepaid expense. Prepaid expense is a current asset. Last year 4,000, current year 6,000. Increase in current asset, that should be deducted. So increase in prepaid expenses, deduct 2,000. That's all. All the current assets and current liabilities we have considered. Now simply take the total. 84,800 plus 18,800 plus 8,000 plus 72,000. It comes to 183,600. Minus 14,000 minus 28,000 minus 2,000. So finally 1,38,800. This is called cash generated from operating activities. If you get positive, it is cash generated. If you get negative, it will be written as cash used. But here positive is there, so cash generated from operating activities. So one item completed. That is operating activities completed. Now second is investing activities. For investing activities, we have to consider non-current assets or fixed assets. Here only two fixed assets are there, land and building, machinery. There is no change in land and building. Ignore land and building. Machinery, last year 164, current year 180, but machinery account already we have prepared. One machine sold and one machine purchased. What is the sale proceed on selling the machine? 10,000. 10,000 rupees are realized on sale of machine. So this 10,000, sale of old machinery 10,000. Positive. Right? And purchase of machine. One machine was purchased, 46,000. So when there is a sale of machine, there is cash inflow. When there is purchase of machine, there is cash outflow. So how much we are paying? 46,000. So here minus 46. Purchase of machinery minus 46. Because money is going out. So 10,000 minus 46,000, you will get minus 36,000. So minus denotes bracket. So cash used in investing activities. Here cash generated from operating activities. Positive, generated. Negative, used. Next one, cash flow from financing activity. In financing activity, redemption of debentures. Actually, debentures were reduced by 40,000. But the company has not repaid 40,000. The company has deducted a discount of 4%. So 40,000 into 4%, you will get 1,600. So deduct 40,000 minus 1,600, 38,400 will be the amount paid by the company to the debenture holders. So redemption of debentures 38,400. Payment of dividend. Dividend paid, first of all, we have taken here non-cash item. Dividend paid, how much? 60,000. That dividend paid should be taken in financing activity. So dividend paid 60,000. Because it is a cash outflow, that's why in bracket. In bracket 60,000. Payment of interest on debenture. Just now I told you interest on debenture is a financing expense. The financing expense will be add back Here, interest on debenture. Again, this interest on debenture should be shown in financing activity. So, interest on debenture. Payment of interest on debenture 14,400. Same 14,400. All these are payments. That's why all are bracket. Take the total of these three items, you'll get 1,12,800 in bracket. Minus 38,400, minus 60,000, minus 14,400. You'll get minus 1,12,800. This is the cash used in financing activity. Over. So three activities completed. Cash flow from operating activity, cash flow from investing activity, cash flow from financing activity. Now we find out net increase or decrease in cash and cash equivalent. 1,38,800 minus 36,000 minus 1,12,800. You are getting minus 10,000. Negative. So here you should write net decrease. If you get positive, net increase. If you get negative, net decrease in cash and cash equivalent. To this net decrease in cash and cash equivalent, we add the cash and cash equivalent at the beginning of the year. At the beginning of the year means last year. Last year, how much is the cash balance? Cash and bank balance last year 1,20,000 given in the balance sheet. So last year cash balance 1,20,000. That 1,20,000 I have taken. Now minus 10,000 plus 1,20,000. You will get 1,10,000. This 1,10,000 is the cash and cash equivalent at the end of the year. Now check whether our answer 1,10,000 is correct or not. Here, cash and cash balance current year 1,10,000. Proved. That means we have done correctly. Here it is given last year 1,20,000, current year 1,10,000. So last year 1,20,000. So minus 10,000 plus 1,20,000, you are getting 1,10,000. This is the cash and cash equivalent at the end of the year. That's it. So this is the end of problem number 10. The ninth problem and 10th problem is on cash flow statement. So if you want the perfect knowledge, watch these videos not once, twice, thrice. Then only you can be able to understand each and every point. And always note it down. Whatever I am explaining in detail, make a note of it. Then definitely you can have a good grasp on this topic of problems on accounting standards. Inshallah, we will continue the next problem in the next video.